Hey everyone, this is Ali Safavi with another episode of our podcast. For this episode, we have my wonderful friend, one of the most interesting people I know in the Insurtech space, Dave Wechsler. Dave, why don't you kick it off with an introduction of yourself, and we'll just take it from there.
I'm glad that I'm one of the most interesting people you know in the space. That's very kind. Dave Wechsler. I'm with OMERS Ventures. OMERS is the one of the pension funds of Ontario. We invest in all different kinds of areas. We're a global fund that generally does Series A to Series C investments. I, however, focus on Insurtech. I joined the fund exactly 1 year ago today. It's my 1 year anniversary.
Oh
So thank you
wow!
for my
Congrats! A
birthday.
year ago
Yeah,
today. What a timing!
yeah, great time.
Honored and humbled. Thanks for being with us on the anniversary instead of popping champagne in the office.
Yeah, exactly. Something like that. But yeah, I focus on Insurtech investments. And prior to coming to OMERS, I was VP of growth at Hippo Insurance. And I first got into Insurtech actually at Comcast, where I ran smart home strategy. I was kind of looking for a B2B play to grow smart home, and Hippo in 2017 was talking about smart home technology. So I met Asaf and his team back in Mountain View when they were a very small team, and started working with them back then, and that got me into Insurtech. And then I did a bunch of startups before that, all in the tech world. So it's been a cool run, been hardcore focused on Insurtech for about 5 years. And the last year has been focused just on investing in the space.
So the reason I call you one of the most interesting people in insurance is a few things. One is obviously one of the hottest topics in insurance is embedded insurance, and you've already kind of played into that space with the Comcast Xfinity / Hippo partnership, which that was big, and that's obviously a big embedded play that maybe we could talk a little bit more about on this podcast. The second reason I find it interesting is you've came from the IoT space into insurance and the whole idea of risk mitigation or any other IoT play, which obviously with Xfinity, that's a big one. And that's hot. So you got that perspective. And then the third reason is that I also know you're a big fan of cyber insurance, which I always wonder why is there so much investments in the space? And we could talk more about that. I mean, with OMERS Ventures, you guys are one of the most deep pocketed investors right now in insurance, sitting in a lot of capital that could be deployed. And obviously, you have big thesis that we can talk a little bit more about as well. So that's why every time I've had a chat with you, it's been a very interesting conversation. And I thought it would be a good person, one of the first people we have on the podcast to kind of just uh, talk Insurtech. So let's kick it up very easy. What is one of the most controversial ideas you have in insurance? What's the unpopular opinion that you have that you think a lot of people have got wrong?
Well, there's a couple of things that come to mind. And I think because you brought up embedded, let's talk about that one. Embedded, I do believe in, but I don't believe in it because of distribution, which I think would have been the assumption with my Comcast experience. I actually think the value of embedded, and to be honest with you, the opportunity with most of InsurTech is really less distribution, more underwriting. I think that distribution is obviously important, and it's one of those things that InsurTechs have a chance to really, I think, change in a lot of ways. But it's really underwriting and the quality of the data and the kind of unique spin that I think InsurTechs can bring to the market that's most intriguing. And while that's not controversial, I do think it's different than the way most people think about embedded today. And even, as we probably would have thought about with the Comcast partnership, Comcast was an interesting play, an amazing opportunity for me. I ran smart home growth strategy basically at Comcast, and I was thinking a lot about a B2B play. And that's when I met the Hippo team. And the obvious play was, Comcast has 30 million customers across the US. If we start talking about home insurance, these customers, can we actually sell? And that came with its own challenges working with a big company and kind of disrupting, sales channels the way they work today. And that's probably more therapy than a podcast session. But what was neat about it was in the process of doing it, and we never really acted on it, but what I really saw was man, this isn't just about the 10 million calls that the call center gets a month. This isn't about the hundreds of thousands of customer visits that, tech teams do, or the, millions of new connects a month that we have. What it really is about is having a smart home device in the home that actually can monitor whether or not you're home, whether or not you've got water leaks, fire, etc. It was really, to me, the excitement around that extra data that both got me into the industry and also made me a big fan of embedded. And again, the distribution play was something that was always intriguing and something that we probably should have done much better at. But it also was kind of, in my mind, the afterthought of where I think Insurtech could go. And I'm not saying anything like any epiphanies here, but I think really what the insurtech market is about today, and specifically embedded, is having better data to underwrite risk. And that to me is something that I think we have to really consider. Distribution is critical. I think it's really important, but I think channels have proven themselves out to be very strong. Obviously, work that you're doing as well, but and I think the channel will always have its place. But where I think tech really has a chance to kind of differentiate itself is better data on underwriting, and I don't think anybody has really proven that yet or really executed well against that yet. But I think that's kind of one of those areas that I'm most intrigued in. And then you mentioned cyber, and we'll just talk about that briefly, not to be controversial, but more just to talk about why I like it. It's a big market that's growing really fast, and it's going to be one of those situations where no one really understands the risk yet. And I think there's some fantastic players in the market who are approaching it with a tech forward position. But I also think there's a generation of companies approaching it that are yet to be really well known, who are actually thinking about the risk slightly differently. And that again goes back to the underwriting advantage, where they actually have technology on-prem. So they're basically looking at what's going on in computers, not from outside the firewall, but actually inside the firewall, that will provide actually, again, very unique underwriting advantages. And that, when I look at cyber and I think about the opportunities for new investment, it largely revolves around those kinds of getting the tech into the enterprise, and then from there actually doing underwriting, which by the way is I think going to be a transformational thing with all insurance. I think insurance is going to be less of an afterthought and more of a part of other products. And again, nothing crazy there. A lot of people are talking about this, but I'm a staunch believer that the models are going to change over the next few years.
Let's talk about that a little bit more. So, one of the biggest thing people are scared of or worried about, I would assume, is, I mean, from what I understand, is kind of the idea of like a big player like Xfinity or Amazon, or people keep talking about Tesla and so on, getting into insurance. And obviously, you have the perspective of Xfinity as a big company who's tried stuff, and now you're also talking about like you're a big believer of the fact that insurance is going to be kind of just packaged into other industries in a sense, which is kind of like an embedded play, but also it could be more than that. It could be like other companies turning into insurance companies. Talk to me a little bit more about that. Like, just paint the picture a little bit better to understand what exactly do you mean.
Yeah, so I think that there's a very asynchronous approach to the way that most insurance works today. Usually, you want to do something or something has happened, and therefore you need insurance. You're buying a car, you need insurance. You're starting a business, you need insurance. Your risk profile has changed, you need insurance. I just think the actual process of both underwriting and distribution will become more and more close to the transaction itself. And the nature of the transaction will also change the nature of the product itself. So you'll see more and more. I don't want to use the word embedded because it's not exactly what I mean, but part and parcel of the product is a coverage, right? So, and by the way, this is something that we've talked about for many years. And again, this isn't revolutionary, but when you think about all of the insights you have and all the ways to provide coverage, for instance, let's talk about I don't know, something like electronics coverage, right? This is more of a warranty example, but when you look at a company that maybe has like a Comcast, like a router in the home, and the router knows exactly what devices are on it, isn't the underwriting process and the sales process different? When you install that new TV in the home and the router automatically recognizes it as a Samsung large screen TV, aren't there opportunities to engage the customer instantaneously around that actual change in your potential risk yeah, risk profile. Or you mentioned Tesla. It's an obvious one, but what a great one, right? Risk no longer is about, hey, I'm going to go buy a car. This is me. Go look me up. Go figure out what kind of risk I am. To, oh, we see that you have this car. This is how you drive. We'd like to underwrite you. So I think these experiences, and it's hard to articulate exactly what that's going to look like, but I do think it's going to be very different than what we see today. And it's exciting. And that may be facilitated by a channel, may not. It's going to certainly be facilitated by better data. But I think most importantly, the nature of the product itself will change in that the coverage becomes part and parcel with the actual transaction. And some of those I think are very obvious, like a Tesla, and then others are not so much. I would argue there's going to be a lot of new products in the market that we don't even probably think of today. And that's exciting, right? That cyber is a good example. Who really thought of cyber 5 years ago? And now it's pretty hard to be a business and not be worried about it.
So let's talk about Tesla for a second and then come back to Xfinity. So Tesla, I understand. I do have a Tesla, and when you try to get, obviously auto insurance quotes, it's expensive. So Tesla tried to kind of fix the problem by getting into the insurance space. I do wonder, like, how big of a financial strategy it is for Tesla to get into the insurance space.
That's a
Put that
problem.
aside because that one is,
Yeah.
we could
Yeah.
basically better understand separate. But I think with them, it was solving a problem as opposed to like a moneymaker. So now, like with Xfinity, I do wonder, like, how big of an incentive would it be for Xfinity to get into the insurance space as opposed to like just doing what they're good at today or expanding to other lines of business? Like, because like I know in the insurance space, we're always thinking about like, what if Amazon does this or that? But I do wonder, these companies, do they care about insurance? Like, I mean, as long
You know,
I mean, if they're setting up as an agency, they'll make very small amount of money per customer. And I understand it could be good, but like from a strategic perspective, I
yeah.
just don't know. If that's good.
I
But
mean,
you have a
again, obviously these are my opinions. No longer do I represent any of these companies, but I do think the allure is big TAM, big market. Everybody needs these products, so they sound exciting. The immediate pushback always is regulatory overhead, right? There's complexities with starting agencies, with getting licensing, with even talking about insurance. And those are not easy with these large companies, especially ones that have lots of touch points with the customers. For instance, at Comcast, I was a designated license holder. We set up an agency, national agency, but the ability for pretty much anybody in the organization to actually talk to a customer about insurance was zero because of regulatory issues. So, despite being, able to do so as a company, the overhead and risk, by the way, associated with that it was large, right? And then when you really talk about that upside, to your point, you could build a pretty big agency pretty quickly, but does that materially impact a company, say like a Comcast or a Tesla or an Amazon, who's doing hundreds of billions of dollars in other areas? Is the juice worth the squeeze? I'd say on a surface level, when you just think about it from new streams of revenue, it's not easy to make the case. But when you think about it more from this, where I started the conversation of evolving product, I think if you can think out into the future a little bit of where this might go, it may very well. It may be a strategic differentiator down the road that you're no longer buying a car and then insurance, not because it's less expensive, but because the way that the customer experience and the way that the asset is protected is very different when it's part and parcel of the product. Or the Comcast example, where it may very well be Comcast's future assurance that it owns the home is not just video and high speed internet, but it's a whole home solution, which may in fact actually include protecting the home in some way. And that may go deeper than just the financial protection. It might go to the home security as well with Xfinity Home. Millions of customers rely on Xfinity Home today for home security. What if now what you're buying, and I know Comcast has lots of customer service issues and people like to make fun of it, but it's a company that actually has a very, I believe, or at least when I was there, had a very strong vision of what the home could be. And I always felt like it could go even broader, which could be not just entertainment experience or control, but actually everything related to making your home a better place. And when you really think about that in depth, I think coverage, financial coverage, is actually part of that solution for making a homeowner's home a better place. So to me, it's a much more comprehensive kind of holistic thinking about where this is all heading.
Got it. Okay. So in your future, I think there's two models that I always think about. Three models, let's say. Model one is a future where your car insurance, sorry, your OEM is your insurance company as well, or yeah, at least bought the insurance with the car. Which means if you have three cars, you have three different insurances, and then obviously your home insurance with someone else, all that. The second model is that you have a single point for insurance or potentially in financial services, which is you have a holistic blanket policy for everything to a large extent. And then the third model is just it's not going to be optimized. It's just going to be like today, which is some is here, some is there. There's just like everyone is trying to sell you insurance, and the question is which one does a better job of selling you that. It sounds like your vision of the future is more likely towards the first one, which is where you just get insurance or warranty with the product you're buying. And in the case of home, it's a little more complicated because home, you buy your home, but then you're saying that potentially it could be a push through, like your internet service provider, like an Xfinity or your smart home provider. Um,
I don't
Potentially,
think,
am I
listen, I
understanding you
don't think there's
correctly?
a clear, yeah, I don't think it's a clear cut, this is the way it's going to be. I just think the models will change, right? And, I'm talking 10 years out, right? What
Yeah,
does
no,
it
I
look like?
understand. We're thinking about
Yeah.
like what's the most plausible or like the
Yeah.
most optimum or idealistic, kind of future. I mean, I don't think anyone has a crystal ball to kind of know
Well,
exactly.
I think where you see it today, though, is like renters insurance. You see a strong play now in renters to go to communities, right? So part of building management systems, you're seeing more and more is having embedded renters products. And that's a little bit more straightforward than home. But now suddenly you're talking about renters and auto being potentially part and parcel of the product. How does that change the overall ecosystem when two fairly large personal lines? I mean, renters isn't huge, but it is certainly the first experience that most people have in actually buying coverages. If it just kind of comes with the apartment, does that change the overall experience long term? And does it also create kind of a different relationship with the buyer? Because the building who actually offers renters as part of a package, and there's a lot of regulatory overhead with that, but they may be in a position to now talk about other products as well.
But then I think in the renter space, I don't think that those companies really care about making money from renters because it's a
Right.
very small amount. I think it's
Right.
just the experience, as you mentioned. That's where like getting into auto lines, I just see them a little bit less likely unless they kind of figure out insurance is going to be a very big part of their livelihood and then push. Because with renters, I mean, I think the pain point is like people want to just rent and then they're blocked and they're like, oh, okay, just buy it here and just let's get it over quickly so I don't lose you as a
Well, that's a
customer.
distribution argument, though, right? If you get them to start paying a renter's bill through you, uh, is it the natural progression to then offer some kind of other coverage because you're engaging them in some way? I don't know. Like, I'm not actually taking a stance either way, but I do think that it's one of those things that you have to at least think about, right? Um,
'Cause I think your experience with again Xfinity and Hippo is interesting because like look when I started COVU or Vero V1, I thought I just like my understanding of distribution was very different than today because now we've tried PTC, we've looked at the agency market, we looked at all the different channels. The role of the push is very important, and I think the human role of the push is also very important, especially if you're trying to sell like a little bit less standard products, like stuff that people are just not wired to buy, like auto insurance or home. And you're trying to upsell them in their home, like liability or protection or umbrella or earthquake or stuff, that is just not forced. And to train a sales force within a different company, you just see it as very difficult.
yeah.
Uh, to kind of like get a renter property company to just get good at cross selling earthquake insurance or cross selling like umbrella insurance. But I think it's definitely interesting. That's why, like, when it comes to embedded, I always wonder. Like, I think people are thinking of it too lightly. I think it's just they think of it too easy. And just when I work with these agencies, I realize even agents whose your job is to sell insurance, a lot of times are struggling with cross sell. And it's a very complex push sometimes, in my opinion.
Well, I think
But
it
good.
begs the questions sometimes about compulsory in coverages, right? Like renters, probably the majority of people who buy renters only get it because they have to. But if you say add life to renters, right? Um, life, low penetration rates. The question just becomes then, if you have a person thinking about risk and loss, are they more likely to buy an ancillary product like life? I don't know, but the attach rate is probably so low today that how could you not, right? Like just because you get a swing at the plate because the customer has never thought about it before, you have a shot of increasing adoption rates. Um, is that a great way to build a business? Probably not. But it may expand the TAM overall, because you're basically taking a compulsory experience and
Yeah.
kind of, you know, adding on around it. But I think your hit rate is going to be very low. There's no doubt about it, right? Your hit rate is going to be super low. And you're probably buying the wrong product, right? Like, do you want your rental company trying to present you life products when they really probably have very little experience with what that means? So they may have the ear of the customer, but they may not even know exactly what to sell the customer. So my guess is you probably get a small attach rate. It may be the wrong product, but you get some, but it may not be like move mountain type stuff, you know?
Yeah, especially again, you have an interesting experience with that. Both because I think Hippo's strategy. I mean, the part that is probably like, and again, don't share anything if
Yeah.
it's not.
Yeah.
Um, Part of it was like selling through their investors and obviously the big real estate construction companies that they work with, and then also through part of like Xfinity. Question was, it sounds like the hit rate was pretty low, but because the volume is so large, they managed to get decent premium from it. But do you think that was that an ongoing thing, or do you think it was more like one-off, like you do market, anyone who's gonna buy is gonna buy, and you're not gonna be able to sell to a lot more people after?
I'm not sure what I can talk about for either company, so I'll try to stay as high level as I can. But one thing I certainly learned in the experience was intent is the most important part when you're talking about insurance.
Right.
So yeah, so Hippo is an unbelievable online underwriter who has incredible data and very friction-free underwriting. So the ability to quote customers is very easy. But if a customer is not really in the mindset of shopping and they're only shopping because both Comcast and Hippo has made it easier, it's hard to close that sale. So, I think there's a real value add for the customer because now they can get, you know, opportunities to kind of see what other quotes look like. But it doesn't just sell itself by any means. Like anything else in the world, you have to actually make that sale happen. And if the customer has high intent at the time, like their policy's coming up for renewal, they're moving, some other indication, the likelihood of close is probably stronger than it would be as an unsolicited, let's get you an insurance quote. And I think that that's really key with any insurance market. I mean, that's actually, by the way, part of that underwriting thing I started with embedding. Like with embedded, what you should know is something has happened that triggers an opportunity to talk about this with the customer, as opposed to waiting for a phone call because a customer suddenly needs something. So I think that that's part of that experience. And in compulsory products, when you're going to need this anyways, it feels very natural to have it all bundled together. One thing other, which is kind of a counter argument, consumers today shop on price, and no matter what, if you and businesses too, I think both in personal lines and commercial lines, price shopping is very important. I wish it wasn't, but it is. I think people often don't understand what they're shopping for, and they make mistakes because of it. But people want comparison pricing, and I think that they're certainly entitled to it. Um, but the problem, of course, with like an embedded distribution play is that comparison could be hard. So you have to kind of remember that that's probably a little bit of an encumbrance as well.
Look, the reason I got into the agency space was because my understanding of it, and again, I'm talking about the bulk of the market, in my opinion, not all the markets. So there's part of the market that are different, but the bulk of the market, they already have a relationship somewhere, unless they're a first time buyer, right? They already have a relationship somewhere, and they already look at that point for their insurance needs.
Yep.
So let's say you bought out insurance from a random agent in a traveler's product from a random independent agent. You're looking at that person to kind of help you make those decisions, and you somehow, And in a lot of cases, they're not looking elsewhere, or kind of like they rely on them to kind of figure it out for them, and just give them different prices and also guide them. Are they making a good decision? Is this company reliable? You know, or whatever else they should be looking at. And that's why we kind of like defaulted back to that channel, because we realized everything that we want to do in terms of owning that customer decision is already being expected from the agent, even if the agent is not always delivering the best experience or doesn't have the tools, time, or capability to do it. But that's the channel that a lot of customers, I think, are looking at for that. And then when you're talking about like trigger points, I think the renewals and like increasing prices or rates is a great trigger point, because people look
Yeah.
at the renewal price has gone up. Oh, it's an amazing trigger point to get in front of customers. Like, hey, do you want me to kind of let's sit down and talk? And we had a crazy amount of kind of like success with that in terms of getting customers to talk to us and sit down, cross sell, upsell, and everything else. But then even with that experience, we realized it can be automated. You actually have to have a human involved, because they have questions. If we would send them a report, they would spend 2 seconds looking at it and look at price. We will get them to meet with someone. We will spend an hour with them and just like cross sell, upsell, advise, everything else. So that's why I'm a big believer in the role of the human, and why the human is just going to be a big part of kind of like that bigger protection piece.
No, yeah, I can't listen. I think we were bombastic in the early days of Insurtech. Oh, we're going to disrupt, and the channel is ridiculous, and blah blah blah. And I think everybody got taught a lesson. The channel is critical for all the reasons that you just said. And I think the number one reason that people need agents or brokers or whatever businesses, et cetera, is the complexity of the product. I'd love this conversation to be less about the price and much more about what's the appropriate coverage. And I think, that's the kind of thing that, outside advice from a professional is really, really useful and valuable. And in certain markets, or certain lines of business, it's only marginally important. And as you kind of move up the value of that insurance, it becomes more and more important. And it's hard to take out the role of the agent. But I wish in all those conversations, it was more about what's the appropriate coverage, because I'm going to spend time with you and actually, and this is no criticism of the agent, this is much more criticism of the customer, who does tend to shop just on price, right? They tend to their eyeball quickly tends to move towards, oh, that one's $100 cheaper, without actually saying what coverages are missing. How is this policy changed compared to the other one? That's the unfortunate side of insurance, which, by the way, I do think, interestingly enough, just macro trends will probably change a lot of that behavior. Stories you read about loss from weather, right? And homeowners not knowing their homes weren't covered by flood or earthquake, whatever it might be, or business loss with like COVID, for interruption. These are things that the average person who shopped on price didn't really understand when they purchased. And if they had somebody actually walking them through a policy, maybe they would. Maybe they asked the right questions now.
So one thing that I learned from that experience, because I spoke to a lot of customers and agencies, was it comes down to trust. Because a lot of people, like, this is an experience that I saw a lot, is they come in, it's like, this is the big page that I have.
Yeah.
Get me this coverage. They're not asking for less coverage, because I think that's important, because a lot of people talk about price. They're not asking for less coverage. They're asking for the same coverage. Just shove it around for me, because that's the extent of the trust they have, because they feel like the agent is trying to, because insurance agents do come off as a little bit salesy. I mean, that's just in the way that it works, right? Like, I'm trying to sell you something, trying to buy something, and whatever you want to kind of sugarcoat it, at the end of the day, it's kind of like the relationship is a little bit like that. Uh, so, but once the customer trusts the agent, I think my experience was, when we would go to a customer and tell them, by the way, you're 50% underinsured in your home, 9 out of 10 would change their coverage when we show
Great.
them why they are. Like,
Yeah.
because I think the trust piece is very important, and people like sometimes undermine how big important it is. Because we had a survey, I think 75 to 80% of people said, look, I want the optimum coverage, optimum price for the optimum coverage. I don't want to overinsure. I don't want to underinsure. I want the right amount of coverage for the right price, contrary to the popular belief. And only 12% of people said, I want the minimum just to be compliant. Only 12%. It doesn't feel that way, but that's what people want. So the question is, like, how do we get them what they want, even if on the surface it doesn't look like that sometimes.
But I
Let's
think
take
that
the
that really is the role of the channel, though, because I think that left to their own, like an online shopper doesn't necessarily always go into the nuances of coverage, right? Like, you look at apples to apples, at least you think it's apples to apples, but then when you really get into the details, there could be differences. So again, I mean, like I think we're probably into a more educated market now, but I hope we are at least. But historically, I think over the last few years, what the digital kind of comparison market did, I think by removing the human, made people falsely, and this is both small businesses and consumers, falsely believe what their coverages may or may not have. And that wasn't deception or anything. It was just consumers not understanding what they were getting because they didn't have a trusted advisor to
Yeah.
actually walk them through it.
Like, I think the most common behavior I saw was people getting the minimum amount of liability, but the minimum amount of deductible, which for me was like, look, you need to up the deductible as much as you could afford, and then like up the liability, and like it's a lot of optimized decisions, which
Yeah.
I just can't blame them on. These are complicated topics.
Yep.
You need to understand the legal language. You need to understand what it covers. You need to understand what the risk is, and somehow we expect people to know all of it. And and spend like hours educating themselves. Where obviously, if you have a trusted agent or advisor, it's their job to figure all of it. That this is why they're getting paid.
Yeah,
So,
it's like, I'm sorry, yeah, go for it.
one thing that I wanted to kind of go to is the protection thing, just from a
Yeah.
time perspective, because the risk management, it was another topic that you definitely have a lot of interesting insights into. So, the thesis that we built at Plug and Play back at the time that I was there, and especially I was a big believer of, was the idea of in the future, I mean, it's a little bit similar to what you're describing, but a little bit different. I think cyber is kind of the best example of it. Is with cyber, the space industry is moving towards protecting the customer as opposed to just insuring the customer. The idea is that I'm going to understand your risk. I'm going to educate you on it as much as you want to know from a trust or transparency perspective. But at the same time, we need to be cautious that customers don't want complexity. So it's only optional in case you have questions, right? Like we don't want to bombard you with all this information unless you want to know. And then I'm going to mitigate the risk or manage the risk, or basically like prevent it from happening. Then we want to be able to somehow finance the risk, or protect your balance sheet, and then help you with the recovery. So it's the full package. Like in auto insurance, the idea is instead of you getting into a car accident and for me to give you a check, for me to fix your car and just here's a fixed car, don't worry about it, then go pick the mechanic, all that, I'll just deal with it. I think with a smart home, some of these were discussed. Even Hippo, I think a lot of times the marketing was around will prevent it from happening, not just we're there before that. How big of a believer are you in that space, or do you think that's going to be a part of the future, or is no, it's still going to be a very transactional relationship?
I think it's going to be a huge part. I think that's a transformational shift on the market. The way insurance has always worked is you take, lots of large historical data, you build pools of risk, you put people into these pools that balance, and then you underwrite against those pools. And those pools assume behaviors, they assume situations, they underwrite against, proxy data, and then the models just kind of work because as premiums are collected, those premiums are invested into stocks and bonds and other things, and insurance companies make profit. I think the future model is very different, where you're underwriting to a single risk versus a pool of risk. And part of that underwriting process is a remediation process, or risk awareness and remediation. So it becomes much more, and it's hard to imagine this today because it economically doesn't work. You can't underwrite a single risk well. I mean, some markets you're seeing it like the E&S market, but it's very hard in these mass markets, be it personal lines or commercial lines, to underwrite single risks. But I do think it's an opportunity, and it's going to be the kind of thing that you'll have a very hands-on relationship with remediation or prevention of risk as well. And some is very scalable, like cyber. You can probably today narrow in on, I don't know, 5, 10 factors that if a customer is good about these factors, the likelihood of their risk is very small. And then you probably need some kind of automation to actually run that process. Um, and then you have others like smart home, which I'm a big believer in. It's hard to actually change risk profile with smart home, but there are behavioral indicators and there are usage indicators that actually can at least help with the underwriting. And then if a problem happens, might be able to curtail some of the losses. So I think the model that you talk about, I mean, I'm a big believer in it. I'm not saying it's easy. I'm not saying that it works in today's kind of actuarial world, but I do think that tomorrow it's going to be the kind of thing where very different relationships are formed. And it's a complicated transaction. It's not an easy transaction, but I do think it actually improves the efficiency of the market a lot. So therefore, I do think it'll be a big part of it. And that's, hey, we're looking at you, Ali. We actually understand whatever you are insuring, and we're going to work with you to not only cover you financially, but also to avoid the risk. And if the loss happens, to quickly remediate the risk so our loss is minimized as well. I do think that there's going to be big incentives for all parties to do that.
And who do you think this part is going to be? Are they going to be the insurance companies moving into a more sophisticated risk management model, or is it going to be the partners? Which, because the vision that you painted for the future, I mean, one of the obviously plausible scenarios is going to be kind of like the OEM
Yeah.
being the insurance company. So you think is the OEM who's going to be the risk manager, and then they just cover the balance sheet, or do you think the insurance companies are going to move into
It's
that
probably a
direction?
combo, right? Like, and by the way, again, this isn't like earth shattering. Like, there's plenty of commercial risk where the underwriter is working with the customer to actually mitigate risk, right? They're doing on-site walkthroughs. They're doing like,
Right, 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 right.
it's not, it's just the
Large
scale.
commercial exists.
It's
I
just the
think it's the
scale.
scalability of it and going down market, kind of like in
Yeah.
a sense
Yeah.
democratizing like risk management for the everyday
Right.
people and everyday businesses.
Right. It's a scalability. That's why like cyber is an interesting one because cyber, I think you can have a very automated process to make sure people are compliant, whereas say smart home is much more complicated. And who are the people involved? Like who's the stack involved? It's probably a combination of the OEM as well as the carrier and the probably the agent as well. Like I think the role of the agent broker becomes much more consulting oriented and partnership oriented, less transactional, in the sense that they may be the ones who are calling you and saying you're out of compliance here, or there's a new standard that we have to meet, or whatever. And I think that richer relationship probably rewards them more generously, but also creates a better environment for their customer by avoiding risk. So I think there's probably a lot of people who are involved in it, and it's not just like this isn't like a stepping stone. Like we're not going to be there tomorrow. It's going to be like if you're out 10 years, I think you're going to see you said large commercial, like those kinds of relationships just down market because they scale much better.
This is why I like the agencies, because I think it needs to be there needs to be like a single point of coordination, and I just don't think if you come from a vertical, like from a verticalized approach, you're going to get there, right? There's going to be
Yeah,
gaps. But if you
yeah,
have a single point, like a risk advisor in a sense, you'll be able to like analyze all the risk an individual has, pure loss, and then from there be able to manage it. That may be in auto insurance, like look at the gaps and then ways to manage the risk beyond just insurance. Because for me, that's what we call reimagining insurance. Because for me to reimagine insurance, and this is how we thought about it, is if you wanted to build insurance from scratch again, the job to be done is that they want to manage risk. In the 1600s, the way they did it was to share the risk, pool the risk, and the way that insurance is today. And insurance really hasn't changed. The only thing that changed was statistics and mathematics, and the data modeling had changed a little, but the concept has not changed.
yeah,
To reimagine insurance for me is to basically do that, go back to the basics and say, how do we use data to manage risk? And then just part of the management of risk, we cover the balance sheet. And it needs to have a single point of view that you look at the holistic risk of the customer and then build a risk management portfolio around that. That's the idealistic future for me.
yeah. And I think the agent, to your point there, the agent's role changes in that, right? It's I think underwriting becomes part of the agent responsibility, as does not just sales, but underwriting, as does risk remediation and partnering with the customer to actually part of risk avoidance, right, or loss avoidance. But that's a cool world, I think, right? Like there's a lot of people in this puzzle, and I think they can shrink a little bit and get a little bit tighter, getting everybody a little bit more reward by recognizing what's the goal, right? The goal is to not have loss. And then the goal is to have financial protection if you do have loss. Well, I think there's a lot of improvements, not improvements, but just changes in the way that the supply chain kind of works there that kind of everybody is a benefactor of. I think that's almost inevitable, actually, to be honest with you. I think actually to what you guys are doing, right? Like the problem with today's world is the agent is just flat out with busy work, right? And doesn't really have the capacity necessarily to worry about whether or not their customers, maybe in larger accounts, but not small accounts, whether or not the customer is doing all they can to actually avoid risk. And to be honest, it's a very transactional relationship. But I think that that's where we're moving into is something that's much more um, you know, a kind of partnership more than
Yeah.
anything.
Because to me, you basically can in the future do almost entirety of it with technology.
Hmm. Hmm.
Um, The part that the agent has that I love and adore about agents, and this is why I'm such a big believer, is the personal touch. Is
Yeah,
crazy how important that is because people like technology, but they still have questions. Yeah? And we're talking about very complex topics that is all about the future, is about math, is about legal contracts, is about like all these very complicated and potentially boring topics for a lot of people. And having an agent to kind of just coordinate and just a personal touch is important. But otherwise, the capability of it needs to be done through technologies because I feel like you cannot expect an individual agent who's been trained to sell and to know about insurance to learn about all these risk managements across all these different types of risk. It's just impossible. So that's why technology is the big missing piece to kind of take us there. And then at the same time, the revolution of IoT and smart home and autonomous driving and everything else is kind of creating this infrastructure to allow us to move into that space. And surprisingly to me, I don't think there's that many people who are actually working on it from this lens. I think there are people who are
yeah,
coming at it from different
yeah,
angles. They kind of like, this is why, we started the company from a philosophical perspective, because I feel like a lot of people came to it from like an angle of like, how do I sell more home insurance? By telling people, hey, I'm going to also help with this. This is how I differentiate. How do I make more money by selling my this? I do this. But when you think about it from a philosophical perspective, I think approaching it from this angle just allows you to kind of see stuff that is complicated. And obviously, there's a lot of learnings involved with it because people don't think about risk or risk management. You have to kind of educate them and get them there.
yep, absolutely. And I think technology does two things. One, it enables the scale of the agent or broker to actually to have more scale, right? They're doing less grunt work, they're doing less paperwork, and then it also enables hopefully more opportunities to engage the customer with actual feedback on their own business, on their own lives. I mean, it could be as simple as, I got it sounds crazy, but I got a notification from your, I don't know, home security
This
system that yeah, that this is broken. You got to fix it soon because that's a compliance issue with your policy. To, hey, there's bad weather approaching. We're calling all of our customers right now.
exactly.
Um, yeah, yeah,
Do this, prepare for a flood. And do you know what?
exactly.
I actually built a blueprint for it already because it's very simple. Like the way to
Yep.
build this, there are FEMA checklists of exactly the step by step things that you have to do. You just make it very easy, accessible, and understanding with a little bit of human support if they have questions. It's like, hey, there's a hurricane coming. Do these 5 things. Make sure your policy is in handy, and then we're also ready on our end. If something happens to you, we'll just jump in very quickly. That is the future.
The agent didn't have time to do
Oh
it
yeah,
10 years
no,
ago. But yeah, but the point now is the agent not only should have time, but that's the way they should be engaging their customer. That's how you have loyalty, and that's how you actually have value add to the customer. And I think in that case, no one complains about paying for anything, right? Because now I'm actually protected, right? This isn't just about getting the cheapest rate. It's, holy moly, my insurance value chain has actually got my back, right? They're actually here to make sure I don't have loss.
and you look at the insurance not as a transactional relationship, but more as a risk advisory
Yeah.
relationship where you have a trusted relationship with someone to kind of. This is why I call it like, look, agents. I don't know. It sounds like we're agreeing on this. I don't want to put words in your mouth. There's a role for the agents in the future, but the role has to change. He has to, have a kind of like evolve to a role of risk advisory as opposed to like selling insurance to people and kind of like doing policy administration and changing the drivers on the policy. It's there's a role, it just has to change, and it has to be much more enabled with technology because that's the only way that that could be delivered.
I'm in agreement. 100%.
I'm
100%.
glad we got to an agreement, Dave. So, not just to kind of wrap up the discussion, what does 2023 look like? What are you looking forward or not looking forward to this year? How do you see, what do you see happening?
I'm excited for 2023. 2022 was a hard year for the insurtech sector. I think some of it was brought on by some of the silliness that investors caused, kind of betting on everything and anything. I think we're going to see a lot of cleaning out of the bad decisions. Startups that perhaps didn't have a good business model or just kind of assumed that, with time they'd figure it out. And I think that's healthy because I think what's going to evolve from it are, much stronger businesses that, actually have good economics, who have good value propositions, and will continue to do, just fine in markets. So I'm excited to see kind of a reality check for the market as a whole, the insurtech market. And I think the insurance market, who long poo-pooed insurtech, really isn't anymore. I mean, I talk to carriers almost daily at this point. There's a lot of excitement about what new startups are doing, about how they're doing it. And I think that kind of approach of just pretending like it wasn't going to happen has been replaced with real enthusiasm for what the future brings. And it's cool to see carriers trying to do some of these things themselves, because I don't think many will be able to do it, and they'll look to buy, they'll look to partner. And those who can do it, great for them. I think it just goes to show you that, the fittest will survive here. So I'm really bullish about 23. I'm really bullish about what Insurtech has brought to the table. It's a much tougher market than it used to be for the entrepreneur. It's also a much tougher market for the investor, but I think tougher markets result in better kind of achievements, and I think the market's going to kind of be a much stronger one because of it. So I'm super excited.
So let me make a few points. Tell me if I got it right or wrong. One, there's going to be less Insurtech starting now
Yes,
in terms of
right.
volume than
Yes,
2022 because of the market conditions. There's going to be more Insurtechs also filtering out because of the market conditions.
definitely.
But the ones who are going to survive are going to be better fits for the industry.
Yeah, I think
At the same time, it sounds like you're saying that insurance companies are going to be more active because they're bigger believers than before. They actually see the value now as opposed to just kind of the petting zoo of Silicon Valley in a sense.
Yeah, listen, a certain large insurance company CEO a couple of years ago at ITC said Insurtechs have done nothing to change the way the market works. And I think that that's wrong. It's like saying Amazon did nothing for the way retail works. Baloney. Amazon changed the entire way retail works, just like Insurtechs are changing the entire way the insurance market works. When we look back in 10 years, nothing will look the same. Some of it will have been achieved by carriers, some will be achieved by disruptors, some will be achieved by partnerships. But I believe that insurance as a whole will look very, very different. And I think a lot of it is because of the hype of 21 and 22, as well as the austerity of 23 and probably 24, that actually drives businesses to the evolution of what insurance looks like. So it's an exciting time to be in the space. Again, it's a harder time to be in it. And I think, as you said, the word filter is going to be applied here to a lot of these businesses. But I think it's a good thing all around, and I'm excited to see it come to fruition.
You see, Dave is with one of the, again, most deep-pocketed Insurtech investors. So if he says they're actively investing, that's a great sign for everyone involved. Hey, just keep him accountable to it. All right, good. Dave, always a pleasure, my friend. Thank you so much for being
on. Yeah, thank you for having me. I appreciate it.
Enjoy the chat.
All right, happy New Year and good luck. I'll talk to you soon. All right, bye.
Thanks.